Hey everyone, welcome back. Smash Property Podcast. Today's episode is all about the Australian property market update for October 2025. In today's episode, we're going to go through what is happening across the Australian property market more broadly, look at each of the capital cities, work out what's hot, what's not, and then we're going to go into some specific areas based on specific budgets at $800,000, $600,000, and $500,000. That and more coming up in today's episode. Let's get into it. Now, before we get started, if you get some value out of the video, I appreciate it if you could like the video and consider subscribing if you haven't already. Now, let's get straight into it. Now, the property market is in an interesting place at the moment. I've got my iPad here. We've got the October property market update hot off the press. I'm going to go through some of these things that we have put together in the month. Now, looking at the property market across the board, the housing market remains tight, all right? Surprise, surprise. You've got demand shifting from specific areas that were once hot into some new emerging markets, which we're going to go through in just a second. But looking at the national dwelling values for the month of September, it rose 0.8%. Now, I like to always put this in dollar terms, which means at the median level, it's risen by about $5,700. Which if you were, again, waiting on the sidelines, and I say this every single month, it is only costing you money, which is why I like to put this in dollar terms so you can actually see what is moving and how much it is actually costing you by waiting. Now, capital cities are continuing to outperform regional markets, and we're going to go through which markets they are in just a second. We've got vacancy rates at record lows, which is pushing rents higher in certain markets, which is, again, just reinforcing the nation's housing shortage. So this month I've done something a little bit different. I wanted to just sort of do a pulse check on some of the macroeconomics that is happening out there in the market, because it is important. It's not just property growing in value. We need to understand what is driving it, and there's a few things we need to look at. So firstly, CPI or annual inflation, the latest reading I have is 3.1%, which if you look at it over across a 3-month trend, it is cooling. We all would know that, well, maybe don't we all, but if you follow that sort of stuff, you would know that it has been cooling for some time. So inflation is easing. However, housing costs remain elevated. Everyone is just, everyone's experiencing that, whether you're renting or whether you are trying to buy. Prices just keep getting more pressurized. The cash rate is on hold at 4.35%. And we've got, again, markets pricing in some cuts late in 2025 through to mid-2026. Although I look at that stuff every single month, I guess the rate at which they were expecting the cuts to come down has eased, but they are still expecting a few more cuts to come through. Now, when we look at unemployment, it's sitting at 4.3, which has slightly risen, but it's still in a healthy phase, so nothing to really be too concerned about with that. Building approvals is at its lowest since 2012, with it only looking to get slightly worse over the next little bit of time. So we're down 17% year on year when it relates to building approvals. Now, population growth is up 2.2% year on year. Surprise, surprise, migration remains the strongest driver for population growth, obviously, and that is a large part of why this housing market is feeling pressurized the way that it has for all of us. So let's take a look at the capital city performance. Now, if you want access to the PDF report, I actually go into a lot more detail than I do on this podcast. I like to keep it just high level and all the need to know information on the podcast. But if you want to deep dive a bit further into the affordability checks and a bit more deep dive into some of the national market data, we have that available on our website, smashpropertyinvesting.com.au. Click on resources and the property market update will be there available for you for free. There's no emails or anything required, so you can get access to it immediately. So check that out if you want to go into more details. But looking at the capital city performance, this is, if you've watched this every month, this is my favorite bit, because this is where we kind of go, we let the numbers do the talking here. And every month I mean, I do this every month, and I'm actually surprised, genuinely, every single month about where these capital cities end up. So, Darwin leading the capital city charge. It is up 1.7%, which at a dollar value is up $9,500. Annually, it is up 12.9%. As you can see, the median value is sitting at just under $560,000. So Darwin leading the charge when it relates to the percentage growth in the month, which is really awesome to see. There's obviously some really good yields there as well. So you're getting a good balance of a bit of growth on a low entry price point, plus some good cash flow to complement as well, which is always good. Perth up 1.6%, which is about $13,500 in dollar value change in the month. Now, annually, it's up 7.5%. And if you've been watching and paying attention, that is slightly cooled from where it once was. Median value sitting at $855,000 for Perth, which is in itself insane. If you've been, involved in the property market, for some time, 10, 15, 20 years, seeing a median value like that in Perth is mind-blowing. Brisbane, up 1.2%, which is about $11,400 in the month in terms of dollar change. Annually, it's up 8.8% with a median value just sitting under $970,000 in Brisbane. Adelaide, sitting in fourth spot there, up 0.9%, which is about $7,700 change in the month. Adelaide's, slightly cooled. You can see the annual growth there sitting at 6.2%. There was once upon a time, maybe 3-4 months ago, that annualized figure was sitting more closely to 8%, if not closer to 9%. So it's definitely cooled down somewhat there. Sydney up 0.8%, which is just under $10,000 in dollar change in the month. Now the median value there sitting at 1.241 million, which is insane. Annual growth is only at 3%. So Sydney is it's growing. It's just a little bit cooler than some of the other capital cities. Canberra has recovered slightly, up 0.7% in the month. Melbourne has had a little bit more growth than what we have seen in previous month. It is now up 0.5% month on month. Annually up 1.9%. Okay, and we've got Hobart with a slight recovery. They're up 0.1%. Which is up $680. So, whoop-de-doo. You haven't really lost if you've been waiting to get into Hobart. Annually, it's up 2.7%. So we've sort of got a tale of a couple of things here. We've got a tale of Darwin, Perth, Brisbane, and Adelaide doing their thing, growing quite substantially. And you've got the big giants like Sydney and Melbourne, a little bit sluggish, starting to recover and entering into a new phase of the market cycle that we are seeing. So love to put that together for you guys. Really interesting just to see, let the numbers do the talking here, as we should really always do when it comes to property for the most part. And it's really nice to see, the areas that we have been buying for some time, Perth, Brisbane, doing amazingly well out there for investors that have already gotten into the market. And maybe some food for thought. If you've been sitting out there on the fence waiting, which market do you go into? That might put into perspective on what might work for you based on the budgets you have and the goals you have and things like that. That being said, if you want help on your specific property journey, you want help putting a plan together, actually finding the right market that fits you and your specific circumstances, help negotiating on a deal, and basically just having the whole process done for you. That's literally what we do at Smash Property Investing. You can find the links in the description, which you can get in touch with us if you need help on your journey. So let's have a look at the areas to focus based on budgets. Now, I have a budget of under $500,000 here that we're going to look at. Now, I put this in here for a couple of reasons. A large majority of investors that do come through to us, particularly in the last sort of 18 months, have had budgets quite restricted at this level. That's largely due to the prices that have gone up, inflation eating away at the purchasing power of our money, plus also the interest rates increasing over the last sort of 2 years, as we have seen, has deteriorated the borrowing capacity of a large chunk of investors. So I know there are a lot of people out there that are looking at this sort of price point, and here are some areas that you might find valuable. Now, Shepparton. I think I mentioned this in last month's update as well. Shepparton, I do like for under $500,000. In terms of its market, I believe it is in a rising phase of the market cycle. It is a nice balance between growth and yield to some degree, depending on the asset that you're looking to buy. So my recommendation, if you have a budget up to $500,000, is definitely pay attention to Shepparton. There are still some houses you can get in Shep. You just need to be careful. There is a flood zone in the region that you need to be aware of. So make sure you get that checked prior to putting an offers down, really. But also, don't just look at Shepparton. There are some towns around the Shepparton area that are, in my opinion, also worthwhile looking at if you have that budget up to $500,000. So don't just look in Shep, look also a little bit around it as well. That whole part, the Goulburn Valley, Northeast Victoria, I do like for a huge bunch of reasons, not to mention its sort of proximity to Melbourne. It's sort of in between two of the biggest capital cities in the country. It's extremely livable. And it's a nice place to be. So definitely pay attention to that part of the world. Moving on to another part of the country, Southeast Queensland townhouses and units. Again, if budget's up to $500,000, there are still some amazing deals that you can get in the Southeast Queensland sector. So pretty much, Sunshine Coast and South. There are some amazing deals to be had. Units in some markets are outperforming houses in terms of growth. In my opinion, a great entry into the Brisbane corridor if you can get a good deal for yourself. There's not too many available in the Brisbane Gold Coast sort of corridor, but I have seen some, and if you've got the right connections, you're working with a BA that has good access to off-market deals, you can definitely get something there if that's what your cup of tea is. Also, budget under $500,000, inner city Melbourne units. I jumped on this train probably about 18 months ago now, picked up a unit for just over 300,000, might have been just under 300,000 actually. And that's almost got 100 grand in growth in 12 months, 18 months, something like that. So yeah, still some amazing value in those markets. Obviously, as you had seen, Melbourne is starting to recover. It's not getting massive growth just yet. Asset selection is going to be important. This is essentially like a bit of a speculation that, Melbourne is on that growth trajectory. And looking at the numbers and the data that we have seen over the past sort of 2-3 months, Melbourne is starting to slowly but surely grow in value month on month. So great one to be in. And it's also reasonably good yields as well in those markets. Now, when I say inner city Melbourne units, here's what I mean. Well, maybe more importantly, here's what I don't mean. Don't buy brand new apartments, 20, 30, 40, however many stories tall. I like to stick with the red brick style apartments that, well, not even apartments, they're units that are maybe 1, 2, 3 stories max. Ideally, they don't have a lift, so there's no maintenance issues with the lift. There is also an issue in Melbourne with regards to building cladding. So make sure you get your, strata reports and all that sort of things checked to see if there's any upcoming building works that are required. So it's not just go buy any unit in Melbourne. Please don't do that. Do the right due diligence on the building itself, what maintenance has happened, what maintenance is coming up. And definitely do not buy these like high-rise style apartments. Avoid that at all costs and stick with the ones that I mentioned. So hopefully that sort of helps you if you're out there looking for budgets, prices, or areas, I should say, with budgets up to $500,000. Let's move on to the next, where to focus if you have a budget under $600,000. Now, there's two, areas, regions that I would be looking at with this sort of budget. Now, the first one for me is regional Victoria. When I say regional Victoria, I am quite literally talking about the region. There's lots of great markets in Victoria at the moment. Lots of overheated markets, so you've got to be careful. But like I always say, Bendigo, Ballarat, Geelong, maybe the outer skirts of Geelong, Traralgon, Kew, Bairnsdale, if you've got specific budgets that will take you out that way, although it's probably on the lower end of that 600K price point, maybe even in the 500Ks. But there are awesome markets in Victoria. As always, we just need to watch the land tax component that is going to eat into the cash flow of the property that you buy. So make sure you want to know what that is and run your numbers before you put in offers down, essentially. 2, bushfire overlays are important things to check in Victoria. Understand what your insurance is going to be looking like in the region that you are buying. There's not too many flood zones, but it's obviously good just to check if the area that you're looking in does have a flood zone. Shepparton, like I mentioned, does. In a certain pocket of the town. And stamp duty is another thing that we need to look at. It is typically a lot higher in Victoria compared to other parts of the country. So just some things to check, not deal breakers, but there are some awesome markets throughout region of Victoria, well under $600,000 that are in a sort of rising growth trend. Still very affordable, obviously, at that price point. And a good, steady, long-term growth prospect, as we can see from the data that we are looking at here. So I'm not going to list all. I just gave you some of the areas there. But maybe in next month's episode, we may go deep dive into the specific locations. If you want to know, you want me to put a video together on the specific locations in Victoria, let me know in the comments below, and we'll put something together in the next few weeks. The other market under $600,000 is the Perth Outer Ring. Perth, as you can see, is one of the top performing markets in the country. In fact, it's second only to Darwin at this point in terms of month-on-month growth. There are still some pockets on the outer rings of Perth that you could still get for under $600,000. I remember Perth is a very long city, really. So when you look at the south of Perth, I'm talking you go down to Rockingham. You can probably even all the way go down to Bunbury, really. Wouldn't buy in Bunbury at the moment. We've done that a little bit of time ago. But don't just look, if you're looking on realestate.com on the map, just in the Perth area. Like, it actually stretches down a lot further south if you have not been to Perth, just to be aware of that, because those are the areas that I'm talking about. They're still performing well. You want to buy where there's reasonably good transport, or as Perth and transport don't really go together, but transport and infrastructure don't really go together in Perth. But if you can buy in an area that has some relevance, some resemblance of transport and infrastructure, then do that. It will definitely serve you well in the longer term. Now, let's get on to the big boy, under $800,000, where to focus. Number one for me, as always, guys, Brisbane is a market that if you've got up to $800,000, you're going to get yourself a high-quality asset. And I'm talking specifically about houses at the moment in that sort of price point. Yields are deteriorating in Brisbane because of the price growth. So it is no longer a yield play or a balance play. It is definitely a growth play. We've got the tightest supply in Brisbane since 2008. So it's got really good fundamentals for growth prospects over the coming years. And one that I personally bought in for a number of years now, and continue to remain that it is going to be a good market for some time, up to $800,000. Be very careful about asset selection. As I always say, you want to look at the specific fundamentals of the property itself, its location, its proximity, and livability is something that we need to look at. Obviously, as many of you know, Brisbane does flood, so make sure you get flood checks done prior to putting offers down, although the state has just changed its laws, so the sales agent will let you know, actually, if it is in a flood zone or not, but just do your own checks anyway. Adelaide, the family suburbs is an area, the family suburbs are the areas that I would want to be looking at. So there are quite a few. Under $800,000, I wouldn't really be wanting to purchase too far over $800 in Adelaide at the moment. It is in a sort of stable phase. It's not massively growing. It's also not, coming back in value. Sort of, it's had some growth. It's doing its thing. It's pretty steady. This is more of a reliable buy and hold performer. Reasonably limited new supply. There is new supply, but it's quite limited. So definitely, if you like that part of the world and you want to invest, one that it will do well over the long term. Melbourne, under $800,000. Now, this is... there are lots of cool spots in Melbourne. Like I say in every episode, there is a lot of supply in Melbourne, but there's also a lot of migration to, counteract that supply with its demand. So we just need to be cautious about where we want to buy. I would typically not want to buy anything new or near new. I would want something that is well established in an established area. Think worst house, best street type thing. Love the Frankston LGA. Also the Hume LGA on the north side, I think is really good as well. Again, just be cautious around, those greenfield developments, of which there are heaps in Melbourne. We don't do the western side. We all know, I say it in every episode, it's extremely oversupplied. So I'd want to get close proximity-ish to the CBD. Obviously good transport connections. And I'm sort of looking for something sort of built sort of pre-2010s, something like that. And again, if we're sort of looking at that 800K price point, we're probably, in fact, should be looking at houses at that price point. And like I mentioned, if you've got a lower budget, there are other asset types you can look at in Melbourne, like I mentioned a little short time ago in the podcast. So definitely at that early stage, like I mentioned, it's not having amazing growth just yet. It is starting to recover. As we've seen, we've been tracking sort of month on month now as to what the data is telling us. However, I believe this is some of the best value that you're going to get pretty much anywhere nationally right now. Where else are you getting a massive capital city? And there's not any one massive than Melbourne. Sydney is bigger. Let's be real. Melbourne just kind of added. I think they added like an LGA, and then they were like, we're bigger than Sydney now. It's like, no, you're not. But go time on Melbourne is what I would say. We also have Perth, the inner and mid rings of Perth, around the 800K price point. It's got good momentum. I always say it. I was like, nah, Perth is done. I say it every episode because it's just one of those things where I'm like, every month I'm like, really? Perth is still going? It's still going. We've got, I would say, conservative growth moving forward. You're not going to get the 8-9%, in my opinion, consistently over the next few years. But you'll still get some decent growth better than you not doing it, is what I would say. And pretty decent-ish yields. Obviously, at the higher end, the yields deteriorate slightly because of the price growth. Rents haven't quite caught up yet, but some decent value in Perth that I see it from my perspective. So, look, where are we? What's my take? Perth, Brisbane, Darwin, driving a lot of the national growth at the moment. Regional markets like regional Queensland, I am seeing slower sales volume. And essentially, in my opinion, that tells me that market is starting to cool. Now, if you are already in that market, like a lot of investors that we have bought for are, that's okay. I just wouldn't be, if you're a new investor entering into the market now, or in the next sort of 12 months, I wouldn't necessarily be focusing on regional Queensland as a go-to. You would have heard a lot about it on our podcast, plus other people's podcasts over the past sort of 12 to 18 months, and it has been great. It's just getting to the stage where it is starting to cool down in terms of sales volume. That typically then means that shortly afterwards, it's going to just be followed by slower growth. Not no growth and not coming back in growth. So don't panic if you're in that market. It just means it's not going to go sort of double-digit growth. Properties aren't going to go from 500 to $1 million in the next few years. It'll have just steady growth over time, but nothing crazy like we have seen. That's sort of been replaced now by regional Victoria for the most part, and some of the inner city units in Melbourne, Sydney as well, for that matter. So, and also the Southeast Queensland sector, as I mentioned. So we've got supply at record lows. We've got migration still surging. Buying well right now is going to mean that over the next sort of 12 to 24 months, you can see your portfolio, if you're buying it right, essentially double in value is how I'd be wanting to look at it over the next sort of 12 to 24 months. It's a big ask to do that. You've got to buy the right asset at the right time, at the right price, as I always say. But for example, you can get into Melbourne, a unit in the 300,000s. There's a very good chance, in my opinion, that I can see those units going from 4 to low 5s very quickly. And likewise, if you're sort of buying houses in those sort of regions, price growth from, the 7 to 8, 900,000 is very realistic to see. So that's why I say you can definitely see some great performance of your portfolio over the 12 to 24 months. Maybe not double in value. That might have been a bit of a stretch, but the point being significant growth in a very short period of time if you buy right. So discipline beats FOMO every single time. Now, if you're ready to make your move and you want help doing so, this is what we do. We specialize in helping people find the right investment properties based on their circumstances. We don't have any off-the-shelf stuff to sell. We don't do certain investments, high-rise apartments, NDIS, co-living. We completely avoid all that sort of stuff. We stick with the fundamentals that's worked for me and every other investor that works with us here. So if you want help on your specific journey, the details, as I mentioned, are in the description below. You can book yourself a call to have a chat with us to see if we can help you or not. There's no obligation. As I always say, if we can't help you, we're going to tell you we can't help you, and we're not going to take you on as a client. We're not going to string you along if I can't do anything good for you. But if I can help you, we'll let you know what we can do, what you can expect, and how it will work. That way, then you can make the right decision for yourself and move on from there. I hope you got some value out of that episode. It's a pleasure putting these property market updates together for you guys every single month. As always, if you got some value out of the video, appreciate it if you could like it. Consider subscribing. Until next time, thank you so much for watching. I'm Nick V, Director of the Smash Property Buyers Agency. Catch you soon.